Good morning, everybody, and welcome to TradeStation's morning market briefing on Thursday, June 28th, 2018. Our presenter today for our morning briefing is Sarah Potter of SheCanTrade.com. European leaders meet in Brussels for a two-day European Union summit starting today. The key subject is going to be migration. EU leaders will attempt to forge a joint policy 3 years after 1 million immigrants arrived, igniting a crisis within the European Union borders. One solution to be discussed is setting up regional disembarkation platforms to actually decide on the refugees' requests before they actually cross the European border. Overnight, the MSCI Asia Pacific Index fell 0.4%, while Japan's Topix Index closed 0.3% lower after weak domestic data added to continuing trade concerns. In Europe, the Stoxx 600 index was 0.4% lower. It's moving lower at this point. Again, weak domestic data added to those trade concerns there. The S&P 500 futures are pointing to a bit of a gain on the opening today. The 10-year Treasury traded flat overnight at 2.831%. At 4:30 Eastern Time today, the Federal Reserve is going to post results from the second and final stage of its 2018 stress tests, with U.S. banks coming off their longest losing streak on record. Investors will keep a close eye on how much the major institutions will be able to pay out in dividends. In the case of Deutsche Bank AG, they'll be hoping that it can pass all parts of the test. In other economic news today, we're going to see the release of weekly jobless claims and the third reading of the first quarter gross domestic product for the U.S. Accenture, Walgreens Boots Alliance, and ConAgra Brands host quarterly earnings calls today. And that's about the wrap for my side of this. Remember that everything we talk about here at the morning briefing is for educational purposes only. All the symbols, all the trading ideas, and everything we discuss is for demonstration purposes. They are not recommendations. This presentation is not an offer or a solicitation of any kind anywhere. We're a TradeStation affiliate as unauthorized new business. Remember that active trading is not suitable for everyone, and options trading carries a high degree of risk and may not be suitable for all traders. We've included in the chat panel today the very important disclosure information regarding the characteristics and risks of standardized options and the other asset classes that we trade here at TradeStation. I urge you to take a look at those at your convenience. Our presenter this morning is Sarah Potter, and she's an active trader in both options and futures markets. She's the author of How You Can Trade Like a Pro, Breaking into Options, Futures, Stocks, and ETFs, and the founder of SheCanTrade.com, a company that's dedicated to sharing real live trades, market analysis, and resources for traders and active investors. Sarah provides her market analysis and her trading insights as a regular contributor to Forbes, TradeStation, All Stars of Options, Traders Expo, Scotia iTrade, and more, and her work's been featured in various media outlets. We want to welcome Sarah right now to the morning market briefing.
Hi, everybody, and thanks, Don, for having me this morning. It's great to be here. I think we're going to have a good morning of trading, so I'm pretty excited to be in front of the computer and placing trades. So I want to talk a little bit about how I think the market's moving right now, particularly in the S&P, and where I think things are going next. So we've had quite a bumpy ride this week. We've had a lot of tweets from Trump, and my observation with how the market's moving is that every time he tweets, we actually see the market move significantly, and I actually think it's overreacting. There's no sound. Can anyone else hear me? Okay. Awesome. Okay, so I'm just going to keep going. So yeah, what I was saying about tweeting, I mean, this is the first time in history where we're getting information about how policy perhaps will be laid out, but we're getting it from social media as opposed to your traditional legislation or coming out through the White House or more formal channels. So I think what's going on now, because we are so used to Having it that way, when we hear things like tweets that are happening from Trump, we see the market actually overreact, and then the next day it almost corrects. And this week in particular has been very, very classic of that kind of behavior. So if we look back this week, so this is my daily chart in the S&P. Monday in particular, we heard of tweets about more tariffs, which obviously pulled the market down a lot. And I think it definitely reacted. And it came back down into some really important support, which is at 2,700. And then the move on Tuesday, I think, was really just the correction. And so because the market went too far, went too low, we saw price come back. And this is so classic, and I can't tell you how many times this happens, is when you have a really big move, which is what we saw Monday, the following day or later in that afternoon, we see that price actually comes back to the middle of where the large move happened. And that's exactly what happened Tuesday. Then Wednesday, we actually had price coming down to the bottom of the range. So now that we're into Thursday, we'll see whether or not we actually break through 2,700 or whether this is actually the bottom and then we move back up again. 2,700 has been such a significant level it's for such a long time now. Like even back into last year, 2,700 was a big deal, right? So if you see this on a weekly chart, this has been a big issue for price to get up through back then. And then it's always come back to this level. It's almost like this is the middle of where the market seems to be comfortable, which is sitting around 2,700 in the S&P. So every time price comes back up, it pulls back into this level. As it goes down, it pulls back. So what's going to happen? If we break through today through 2,700, I think there's going to be huge opportunities to sell and to take things as price rides down to 2,600. We've seen this happen before, and so that to me is something that's kind of a higher probability because we've had it happen before. Now, if we actually hold here at 2,700, then my expectation is price is actually going to move higher, and we're going to have a lackluster day. So price moving from 2,700 would only come up into 2,720. I don't think we're going to get beyond 2,720 if the price in the S&P holds at 2,700. So what does that mean for me for trading or for you for trading? It means that watching the market open this morning is going to be really important, and letting it settle in. So not just the first few bars, letting it go, giving it 15 minutes to see where things are going to move for the rest of the day. If you want to take a quick trade, I do think there will be momentum into at the 2,700 level on whichever direction we do see the market open. So if things are going down, I think it's going down far. 2,600. I think we're going to have a significant move, Albert, if price gets below 2,700, and we're sitting right there. We closed right around that yesterday. So this is going to be a big day today. Now remember, Monday opened with a big day. Next week we are also going into summer, and we have a few days off, which also means that the market will be probably kind of quiet next week. So people are looking to probably make their money this week. So another reason why I think you can expect to have a bigger move today, or whether it's today or tomorrow, but this week, because I think people are going to want to move, settle out their positions, and next week be on vacation. And so your big guys that are, that have the ability to move their around, I think this is going to be an active day. We certainly want to watch volume as well today in the S&P, and that's another thing, a kind of clue for whether or not we're going to build momentum. When we've had some of these moves that have been that slow, those slow, methodical sell-offs that doesn't have the momentum, the big, fast moves, more like Monday was a big, fast move. We had some down days last week, but they were slow. It was the volume that was the big difference. If the volume isn't coming in as things are selling off, it becomes a little bit more of a controlled sell-off as opposed to that fast-moving flash moves. So the S&P, so the ES, which is the futures contract of the S&P, the SPX and SPY, those are all representations of the same thing, but they have different measures. So like the SPY, which is the ETF, is a tenth of what you're seeing here. The SPX is actually kind of this nice little, I think it's a really nice trading instrument to place trades in. You can do options trades in it, but you can still trade things directionally in it. And you're not as exposed as you are, in like an options on futures on the ES. So it's a nice little hybrid. Although, each one of these trading instruments certainly have their nuances. So you want to make sure you definitely understand the differences between each one of them, but they're all representations of how the S&P is moving. So you'll see, like in my trading room, I trade live every day in front of all my members. We've had a SPY trade on pretty well every week for the last little while. We've been placing these trades a little more directionally and a little more focused on quicker turnaround time. So focused on trying not to hold the trades more than kind of a day or two and just taking advantage of the momentum. So I'm going to be looking for the same thing here in SPY to be able to short things here if I can. So if price stays below 270 here, then yeah, I'm going to short. I'm going to buy a put, and expectation is that I think things are going to go lower. If you want to trade, I mean, depending if you want to do the futures contract, same idea. But 2,700 is the make or break level. If we break down below there, I think we've got a significant sell-off to have. Now, I don't think we're going to get below 2260 in this case, right? So SPY, remember, being the 10th, so we're talking about 260 as opposed to 2600 in the ES. But we do have support down here. And so if things go, you know, there's no real support. It's just going to go. And we've already got a market looking like it's doing that. So the only reason why I didn't jump on shorting at the end of the day yesterday is because we've had so many days where it looks like price is going to move, whether it's to the upside or downside, and then it really just stays within the range that it's in. So I want to get excited about starting to sell. You can make a lot of money when you short things, but you gotta, I almost, when things are short and when the market starts really selling off, I do want to see it sell off first, and then I want to pick some up. There'll be lots of room for me to make some money in here. Granted, it might be fast, but I should be able to pick some up. I'm not necessarily going to pick up shorts by just looking at how the market moved the day before, because how many days this year have we seen the market up one day, down the next? It doesn't necessarily continue day after day, and it doesn't necessarily have any momentum behind the moves. We've had a lot of slow days too. So that's kind of where I'm thinking what's going to happen. I think that 2,700 level is just so important. As I said, so we did a live trading session together with Dawn on TradeStation yesterday afternoon, and just want to kind of, if people had placed that trade, give you a little highlight on that. So I bought a put in eBay, and I bought that. So we were trading, I think it was about 130. And we can see here what happened yesterday. eBay continued to move lower. So by the end of the day, we had already started to see some profits in the trade, and that looks good to continue to move lower. So I'm looking for eBay to get into about $35. So especially if the whole market starts selling off, I'm positioned nicely in a stock like this in eBay. My expectation is we're going to come into $35.50. I already own the, I think it was the, let me check. I think it was a 36 put I bought. Oh, 38 put. I bought a 38 put in eBay. Expires July 20th, but I'm not intending to hold the trade till July 20th. Hopefully we'll be out of that trade today as things push down a little lower. So this is my foundations indicator, which is available at the Trading App Store. And you can use the indicator basically like a trading system. It'll tell you entries and exits on trades. So when things line up all green, like they are here in eBay, that means like go, good, the stock's good to go, it's good to move. So 3 dots that are all lined up is a signal that it's going to have a big move. You can see that the indicator did pick up the move on eBay. I'd love to say I was in it up here, but I wasn't. I've only bought the put now, but the indicator is still firing green, so still assumption that it's going to continue to move lower. So I'm in the trade now, and I'm going to let it run a little lower. It's just a nice, really nice indicator that'll tell you when things are about to have a bigger move. You look for either 3 green dots like this or 3 blue dots, and then you place the trade in the direction. It's nice and simple. Takes all sorts of complicated things and makes it pretty simple for trading and looking for something that's going to have a big move. So eBay continues to look good here on the indicator. We are already making money on that, and I'm going to look to try to make some more on that put. So thank you, Dawn. Dawn shared the link there for the foundations indicator, so hopefully you guys can go check that out and begin to use that as part of your trading tools as well. It's very helpful for looking through stocks. You can use it in futures as well, whatever you like to use, and look for opportunities to buy or sell when things are going to have a big move. So other stocks that I'm watching this morning in particular is going to be financial stocks, especially if the market starts selling off. I think the financial stocks are going to go down hard, and so those are ones that I'm going to be paying most attention to. I actually sometimes, if I don't want to trade in the index, I'll pick trading some of the financial stocks instead. They usually are moving pretty similarly, and they have really nice moves. So Goldman Sachs is one that I'm really interested in buying a put in. This is one that began to sell off yesterday. It's been in a downtrend for a while, so that's great. And we have the foundations indicator here is also firing blue. So see how it's all 3 blue dots? So it's also indicating that yes, the stock is ready to have a large move as well. And because we've been selling off for so long, so I do want to buy a put in this. You could do a call credit spread up here as well if you want to be a little safer, you know, sell the 225s, buy back the 230s, that kind of options type trade. Or you can just look to buy the put and have price come lower. I think it'd be great to see it come down to 210. That would be a huge money maker. I probably would get out of it though if price comes into about 215. Really just pick up the trade and have it and hold the trade as long as it hits the average 2 range, that kind of thing. Those are always just nice quick trades. We're not in a trending market overall where I think you really want to sit in something. You know, I have one day where I'm up and I think, great, I'm going to let it run, and then the next day, all my profit's gone. And then I'm like, oh, why didn't I get out of that trade, right? There's many of those days these days. That's kind of how the market's moving. So just kind of switch a little bit to grabbing the profit when I can. So I think Goldman Sachs looks good for a short, especially if the market starts selling off. Now, we've talked about only selling off because that's where I think things look like they're going to go. As I said, if 2,700 bounces and we actually move up this morning, then I want to look at a couple different positions. So I kind of have these two ideas going for me. And the other one that I'm interested in, I've actually done a bit of Walmart. So Walmart is coming up strong. It's had a little trouble here with the 21 EMA off the weekly chart, but I do think that Walmart overall is turning around. And so if the broad market can push things up through this bit of resistance here, look at the potential that we have here in Walmart. That's quite a bit. That's a really big move. So this is one that's, to me, is definitely on a top priority for a stock that I think is turning around. Now this stock also stayed high on Monday. So if we look back Thursday, Wednesday, Tuesday, we still had, even into last week, Walmart was already shifting to move higher. Even on Monday when everything sold off, Walmart was one of the few stocks that continued to move higher. So I think I'm already in a call in Walmart now. I'm probably going to exit that trade pretty soon. But I want to take one out as well a little bit longer and take advantage of these longer moves. And every time price pulls up, kind of getting in and out, being a little more active with Walmart. So to me, this would be something that would move up to the top of my watch list to be paying attention to on a pretty consistent basis, to be looking for trades to get in and out of. Now, the indicator isn't firing yet. I think that'll probably change today if we do see the market move higher. And this just has so much potential to get up higher without any resistance. So those kind of scenarios are great. If we look back at what happened in Walmart the last time, it did exactly that. So back in the fall of this year, once price broke through resistance, it just didn't stop and it climbed higher and higher and higher. And I think Walmart's ready to do that again. So once and we're pretty well here at this spot, same thing with down here. Once we get through the resistance, this looks fantastic to start moving higher. All right, so kind of told you a little bit about a couple stocks that I'm looking for. Gave you some thoughts there on the S&P. Does anyone have any particular markets that you want me to go through for you? Or answer any of your questions. If you do, just put that in the chat window. I'm happy to answer them. I'm also just going to go to the queues too while I'm just waiting for people to type in questions. We'll talk a little bit about this. So this being the NASDAQ, obviously a different market, but something that's also, I think, very interesting to look to trade. So this one, though, unlike SPY, which looks like doesn't really have much to hold on to before it sells off, here in the queues, we have actually coming into some support on the weekly chart. So in terms of what market to trade, I've spent so much time today on the ES or SPY because I think it looks like an easier chart to trade rather than this. But if the market pops up today, if we start seeing some positive moves, some positive ticks, the VIX moving lower, then I think NASDAQ actually has the opportunity to really have a big turnaround, a big change, and a more potential to the upside. So I do want to keep a close eye on how the NASDAQ is moving today as well, because if we end up actually being positive, I don't think this is a trade for this morning, but could be something that we could do this afternoon or into tomorrow, and looking again for things to resume and get comfortable. We have no setup yet. The indicator notice is still red. We got one red dot, so I'm not going to place the trade right away. But I do think this is something that if we do firm up around 170 here, then this is where I want to look to see the turnaround, a resuming of the trend moving higher. So I am keeping an eye on this one as well. Okay, so let's go from the bottom to the top here with Twitter. Twitter's an interesting stock to trade. It generally moves on its own, independent of how the broad market is doing. I find it quite interesting. I mean, this is a whole conversation we could have about Twitter and how I think, Donald Trump has actually changed the company and really helped the company, whether he intended to or not. I think just from a user point of view and its relevance, um, it's become more relevant today because of how the president is using this tool to communicate. And so I think a lot of people are following that, and then there's a lot of rhetoric that comes out of it because of that. So when you look at the stock price now, you can see that things have really shifted and changed for a company that I think really struggled off the mark when this stock came on the market, and now looking at it rise at this point. I think it's having trouble up here at $45. I don't really think we're going to be moving higher in this. I think the better trade in Twitter is to actually wait for Twitter to come back to $40 and then buy the call. So looking at it as if it's doing the same thing that we've seen back in April, it's struggling up here. It hasn't been able to continue its momentum. So I would rather wait for price to come a bit lower, see how it came even through the 8 and 13, came back down to the 21. I think it's about time it's ready for that to have that pullback. So I'd rather wait for it to pull back and then trade. I agree with you, David. I'm surprised this round, and I think if your president wasn't using Twitter, that I think the company would be a very different place. And I think he has made Twitter relevant again, where everyone else, I think, have moved on from Twitter and they were using Instagram and that kind of thing. Twitter has never really proven its profit models. And right now, I think it's just really relying on how media and everybody kind of need to be using it right now because that's how the president is choosing to communicate, and that's making the company more relevant than anything. That's my personal opinion, but yeah. Etsy, I loving Etsy, loving Square. We just launched an investing newsletter. So anybody who's a member at She Can Trade right now, you also get our investing newsletter, which is focused more on long-term investing, buying and holding. It's a little more active. I'm not a buy and hold forever kind of person. I do believe you need to set targets for even long-term investing. But anyways, our newsletter has just launched. We just had one. So the next one is coming up here at the end of the week. So I'm all over these kinds of companies right now. I think that they have a real opportunity to be that game changer, to be so instilled in our society, and Etsy is one of those as well. And I think that that is a huge opportunity for growth. And so I love this stock overall for the long term here. I think it's great. To place a trade in it right now, I think you got to wait for it to pull back. I don't think there's an entry here. If anything, you could short, but the short would be so small that I'd rather wait for it to pull back and then be on the call side of this, or ideally owning stock and selling covered calls on this, to me, is the way to go. So as price is pulling back right now, that's the opportunity, I believe, to pick it up as a stock and to be doing covered calls on this for a more long-term strategy. That's how I see Etsy. Okay, so for oil, let's do, I think I can pull it up. I don't have the future symbol. I can't get it on my, I don't have it set up, so I can't look that. So So sorry, Andrea, I don't think I can give you what I think you're looking for. IQ. Oh yeah, we can talk about USO. I can pull that up easily. Okay, we'll just do that after. All right, so new one to the game, not a lot of history here. We're pulling back into the 30 now. I wouldn't grab it. I mean, I think this looks so appealing to say, I'm going to buy this when price comes down to about $30 and watch the stock move higher. I'd just be careful that it's not actually starting to fall down again, that the recent highs at 45 was just too much and you see the company come back. So I'd actually watch this, see that price is going to hold around $30, and actually have a day or two where this actually moves sideways first before I would pick up that call. Because a lot of these new companies, once they start moving in one direction, will actually continue. So I don't think there's a lot of evidence yet that this is actually going to stop at $30. But $30 is where I'd want to pay attention to it to see whether or not it's moving. It's going to go any lower. USO. So it's kind of hanging out there right now, doing its own thing. I mean, it's just come off of a really nice move, and this is often with oil. Oil has big moves, right? And they're great to trade, but a lot of people pick up the oil trades late, and I kind of think that the move is a little over in this. That we need it to pull back again before we'd expect another one. This is a classic pattern where this little W that gets created, so I always call W's as they're the winning trades. These are the winners. That you actually want to pick them up down here and actually be getting out now or getting out yesterday. So I think if things not to come back again before I would trade that again. All right, guys, I've got running out of time here. I've got 2 minutes. So would love to have you come over to shecantrade.com. Come and trade with us. We are trading every day, live trades, real money, and text trade alerts. That's shecantrade.com. Thanks for coming this morning. Have a great day in the markets. I'm going to go get some trading set up myself, and take care. Bye-bye.